Always good to have you. And, we always get a good view of a number of different things from you. So let's start off with the consumer. I think on the conference call you said you're taking kind of a wait and see a little bit, but you certainly did have good demand in the first quarter. So what's the wait and see about then?
Sure. David, thanks for having me back, and good morning. So we had a really strong first quarter, and I was really pleased with the results, 7% top-line growth. And underlying that, we had more demand than we could supply. So we're still seeing really good consumer interest in the brands. Consumer spending has really continued. When you look underneath, consumers are responding to innovation. They're responding to brands. They're responding to people who are investing behind them. So we expect that demand to continue. That said, there's certainly pressure. The inflation that we all know is out there. We're going to have to wait and see, as I said on the call, to see exactly how the consumer responds for the rest of the year. But as we look forward, we're seeing a really good lineup for back to school. We've got about 18% more inventory out there for back to school, of pounds on the floor, we call it, that we had last year. We have good, solid bookings for the back half. So we're cautiously optimistic, I would say, about the consumer, but how they respond to the significant inflation out there is still yet to be determined.
Yeah. So again, jury out on whether they're going to change their behavior, but you certainly want to be prepared if, in fact, that is the case?
Yeah, absolutely. And, we're not stopping what we're doing. One of the key parts of our three-year strategy, which we call our full potential plan, is to invest behind the consumer, invest behind the business. So we're continuing to invest in media, spending on our brands. We're continuing to invest in product innovations. We have some really big product launches in both our innerwear business and in our Champion business that are happening right now. So we're leaning in with the consumer and making sure that we're there to meet their needs and be prepared for the back half of the year.
Things you can control. This is Morgan, by the way, but accelerating inflation, continued COVID-19 disruptions, logistical challenges were other things that you noted in these earnings that are continuing to have an effect. Is the worst over, do you think, in terms of sort of those macro uncertainties, or are they continuing to play out and potentially even gaining steam given everything we're seeing with Ukraine and also the China COVID lockdowns?
Yeah. I certainly hope the worst is over, but there are there's push and take and give back and forth. When you look at the supply chain, for example, it's definitely still disrupted out there. An average container that's coming from China to the West Coast is about 73 days. That's what we saw in Q1. Normal before COVID was about 35 days, so it's 2x. The lockdown in Shanghai certainly going to affect the ports there. The ports out in LA on the West Coast, there's still 40 plus ships out there that are at anchor or slow steaming their way in. So COVID is still disrupted. The supply chain is still disrupted. But at the same time, we're trying to take advantage of the disruption, actually, and execute our plan faster and faster. But I think we're going to have to wait and see exactly what happens. And the back half of this year with inflation and maybe early into 23 is going to tell us a lot about how the consumer behaves. And if the consumer stays strong, that'll help us work through all these macro problems.
Do you have enough inventory? Have you been able to restock? Or are you still dealing with certain shortages?
Sure. We are still trying to restock. And if you think about our results in the first quarter, in our Champion business specifically, we missed $40 million opportunity just because we didn't have the inventory and one of our suppliers couldn't deliver. So that business goes up to a 14% growth in the first quarter. Going back to there's more demand than there is supply. So we're working through that. We have a lot of inventory that we call in transit in our supply chain right now that we're waiting to hit. That should hit and have us ready for back to school as we go forward. So that'll work its way out in the back half of the year. But inventory and having enough of it to meet that consumer demand is still a challenge.